Wow, I think you were here before I even clicked start.
Hello.
What's up? Why is it showing me UCAM lines? Let's turn that off. Okay, here we go.
Yellow.
Yellow. How are you doing? Can you hear me?
Fantastic. I got a lot of background noise. I'm sure it's going to be loud for you.
Oh, no, it's good. If you're not ready yet, I mean, there's no hurry.
I
I'll
was
do
just
this to
throwing the
get the
girl
kids
in
in
the
bed
tub.
and throw the girl in the tub.
Okay.
What's going on with this thing? Okay. Screen share. Here we go.
That's an upward trend.
What?
That's an upward trend.
Yes, it is. Yes, sir. Yeah, just a little bit of one. Let's turn it to a daily. Man,
Is is this the same thing we were on previously?
no. Do you know what the SPY is?
Spy, no.
This is the S&P Depository Receipts, which is an ETF which gets traded on the exchange and mirrors the S&P 500 index.
I know what an EFT is, but I don't know what an ETF is.
An ETF is an exchange-traded fund, and they are designed to trade in the same fashion as whatever vehicle it is that they're trying to mirror. So if it's a vehicle designed to mirror like this one, you can see it right here, the S&P 500, if you can see where my mouse is, then this one is supposed to be the same price and mirror and do the exact same thing as the great big stock index of 500 separate companies.
How many acronyms do you think there are within the trading business?
50 billion. It's kind of sick, but
Yeah, I was going to say.
it's also pretty. I don't know. I never had a problem with them. Every once in a while, I would stumble on them like ATF or well, you know, what's that? Yeah, I just took them all in time, and eventually they became part of my vocabulary, I guess.
Yeah.
Been too hard to digest all that. You know, at first it's just like because it seems like you're just diving in, you know, head first, trying to absorb everything at once, and that's really difficult. But the good thing is, uh, I'm not going to waste your time with a bunch of, you know, other miscellaneous crap that you don't need to know. I'll only tell you the things that I think are useful.
Well, like the S&P 500, I've heard of it. I don't really think that knowing what the S and the P means
Yeah,
is
that doesn't.
important.
Yeah, no, it's not. It
So,
stands for
but
Standard Poor's 500, and it does. If you never knew that, it wouldn't matter for shit.
exactly. But I do know for myself, working in the insurance industry, the insurance companies like to pay for claims through electric funds transfers, and I thought
Hmm.
it might be strange if that was the same thing but only different.
Oh no, that's yeah. An electronic funds transfer is definitely not the same beast at all. This is it's kind of think of you can kind of well, you know what a mutual fund is, I'm assuming.
Oh yeah.
So they're kind of like mutual funds that are completely open-ended, very liquid, and are composed of the individual pieces that make them up. So if it's an ETF, then they're constantly trading and they're doing trades back and forth to make sure that their fund is gaining or losing value in the exact same ratio that the actual index is. Because an index like the Dow 30 or the Russell 2000, or whatever else you want to talk about. The S&P 500 is just one.
Hey, Carl.
Yeah.
My phone is telling me that Hangouts is stopped. I have a feeling that it's going to crash.
Holy crap.
Hi.
And the sound is horrible on this phone. I thought it was my other phone that was causing the problem, so I can't. Oh, there we go.
There
Kill
you
that.
are. Yeah, turn
I
off a
can't see your
video.
screen, but I think...
No, I turned off screen sharing so it'd be easier to connect because I think sometimes that initial bandwidth burst is kind of bad. All right. There we go. Let's share it again.
Okay. I'm going to put my thing on.
Oh, 1 second. Do. All right, let's do that again. All right, there we go. So yeah, we were talking about ETFs and how they all. A lot of this, I guess, the way I digested a lot of the acronyms and whatnot is just what you said. It really doesn't matter, you know, what the acronym is, just that so long as you know what it represents, and that comes pretty easily.
So yeah, like I have no idea what EFT is, but I understand what you said was what it stood for, and actually electronic trading.
ETF, electronic. Yeah, I think it's electronic trading fund, something like that. Or yeah. Anyways, it doesn't even matter what it stands for. It matters what it is. And what it is just a vehicle that you can trade, because you can't trade the S&P 500, but you can trade the SPY.
Why can't you trade
and you'll
the 500?
hear spiders or SPY. Because there's nothing to trade. It's just a number. Okay, we looked at the 500 stocks and we took a snapshot, and this is what they were all worth. Here's the number. You can trade something that's called, and some platforms have this, called a contract for difference. But for the most part, when you're dealing with guys that do contract for difference, you're dealing with little bitty small houses, and so that's something you don't even ever really need to know.
Okay, so what you just said there made me think about things a lot differently, because I've thought about the S&P 500 before, and I've often wondered how they measure that number and why that's important. So this is like the top Fortune 500 companies. I mean, the S&P 500 is.
Yeah, if you belong to the S&P 500, Standard & Poor's is to be in their index. We think you are a representative of the American stock market as a whole, so you get a place in our one of the 500. And it is literally the most important, without a doubt, the most important index in the American stock market. There is no other index that is more important. S&P 500 trumps everything, and it pisses me off to no end because the news reporters just pretend like the Dow is the big thing. And it's not. The Dow is nothing. It's 30 companies. It's 30 old fogey companies, and they're usually lagging behind and doing things that are not. Sometimes when things begin to change, they're doing things that are not representative of the market as a whole. Because what happens when in a stock market change from a bull market to a bear market, or a bear market to a bull market, a big major change where we're talking about, it's now going to be a bull market for the next, 3, 4, 5 years, then the Dow is usually the last one to change. And that's all you ever hear on the news. It's really kind of frustrating.
So the other thing that makes me think about that, like, and the things that I've gleaned from the stock market or about the stock market are from stupid movies that I'm sure maybe misrepresent a lot about it. But like, there's literally things on the stock market about pork bellies, and I thought that was a joke at one time, and then I realized that no, there's literally people that are buying halves of pork, and depending on how much they sell for.
But don't confuse that with the stock market. That's not the stock market. That's part of the commodities exchange, and that's a totally different bear.
So, like, the price of aluminum per pound is also on the commodities. The price of steel per pound is also.
Yes.
So yeah.
So if you ever hear me talk about, someone comes up to me and asks me, what do? I say I trade stocks, futures, and foreign exchange or forex, and that pretty much covers the entire universe of everything. There are other ways to trade commodities, like if you're really trading. This is getting into the things that really don't matter for your success, but.
Really quick, let me just glean over what you just said.
Sure.
I understand stocks.
Okay.
Penske Corporation is a publicly traded company, so you own a portion of that company.
So what's a future?
Foreign exchange is something that the dollar is selling for this much towards the yen. I understand that. Futures, I am totally lost.
What is that? Yeah, absolutely. What is that? A future is nothing but a contract that says, hey, I'm buying gold. So, let's talk a little bit about futures first before I go down that road. A future there are futures contracts. So the contracts typically can be any month, dated on any month and on any year. But the most common ones are divided into 4 months of the year. There'll be a December contract, a March contract, a June contract, and a September contract. So 4 contracts a year. And the contract says nothing but that, hey, if I bought this contract, then I've purchased the right to sell, let's say it's gold. I bought, and let's say we're using the current month contract, so I think the December contract is just now starting to come into to be heavily traded because it's the current month. So if I purchase the December gold futures, that means that when the contract expires, which is going to be something like December the, 15th to 20th, something like that, there's a specific date on it, that I will sell whoever is on the other side of my contract a certain amount of gold at this price. So what does that mean? Well, okay, so let's look at a gold contract. I think I can look at it on these things. Let's look at it.
You're not sharing your screen, by the way.
Oh, sorry. Share it. Reshare it. Let me see if I can find the gold futures contract. Let's see if they have gold. Okay, yeah, we've got all kinds of. You can see it right here. Futures, COMEX, futures, COMEX, futures, COMEX. These weird, crazy symbols.
I can't see it.
You can't see it? Is it off the edge of the screen? It might be on if you're on your phone.
No, I'm on my phone, but it's just an icon. You're not sharing anything.
Oh, you don't see it at my screen at all?
at all.
Let's give it a second. I won't do anything. Nothing yet?
Nada.
Let me stop and restart. Screen share, screen one share. Alright, I just reshared the screen. Anything now?
Nada.
Alright, well, I'll leave it up and we'll talk at general principles.
Okay.
What I have on the screen is not really particularly useful for what I want to tell you anyways. A futures contract basically says that when the contract ends, it has an expiration date, that you have agreed to either buy or sell, depending on how you purchased it or sold it, that contract at a particular price when the contract ends. So it's just like anything else that you trade. You know, it's the same thing as I forget what we were talking about. You know, short sales the other day, whereas you can really overthink it and get your head all caught up into what's really going on, where all you have to realize is, hey, I bought gold at $1,240 an ounce, and at any time between now and when the contract expires, I can sell it for whatever the contract is worth, and the contract is going to be worth pretty much the price of gold plus maybe some, whatever the interest rate happens to be, or the cost to store the gold. All those things are kind of built into it. The wonderful thing about it is you don't have to worry about that because the techniques I've talked about include everything in price. All you have to do is look at the price of the contract and decide whether what you're seeing is something that you want to trade or not.
Okay.
So that may not tell you exactly what a futures contract is, but you know that if you buy a futures contract in December 2014 at the price I'm looking at right now is $1,218 an ounce, and then sometime between now and December you decided to sell that contract for more money than $1,218 an ounce, then you made money. If you decided to sell it at something less than that, you lost money. Just like any other stock or Forex or anything else you trade.
I guess I'm still not understanding. Like, so you're buying and selling what the future monetary value of that?
Yeah. So here's how it works. I mean, there's the actual gold itself will trade at whatever gold is trading at, and that's called spot gold. Gold is a really great example because it has multiple futures contracts going out to different points into the future. But gold itself, if you wanted to contact a gold dealer that had actual physical gold, the real stuff, and you said, hey, look, I want $500,000 worth of gold. How many ounces are you going to give me? He's going to tell you, okay, this is how much I'm going to give you based on the price of gold per ounce. It's the same thing on the futures contract, except that the contract at some point will expire. At some point, the contract for the future will catch the present. And when that happens, the contract will end, and whatever price happens to be in the contract, then something really weird actually happens. If you own the contract, you have an obligation to give the person that is on the other side of your trade the actual physical commodity. So if I bought gold at $1,200 an ounce today, and on December 20th or whenever it is that the contract expired, gold happened to be at $1,100 an ounce, then I lost money because I bought gold at $1,200 way back when, before I actually knew what spot gold was going to be when the futures contract caught up to the real market. So you're basically making a bet on, hey, this is what I think is going to happen, but again, all that doesn't matter. If that contract is going to go up and down based on the current price of gold, but by far and away the most. I mean, there's going to be some other little things in there that change the price of the contract, like interest rates and the cost of storage and holding and transportation. But all you have to really know is that I bought gold at $1,200 an ounce today, and I think that it's going to go up sometime between today and before the contract expires. And even if you weren't sure that it was going to go up before the contract expires, you can do what's called rolling your contract. You sell the contract that you have in the current month that you're in, then you buy the next futures contract, and you just wait for that contract to either appreciate or depreciate depending on which way you think gold is going. So that's a really complicated way of actually understanding that I bought gold now, I think it's going up, or I bought gold, or I sold gold now, I think it's going down. And again, that's all you really need to know.
Wow. Well, gold is going down. On long term,
yeah, it's if you thought that gold was going to go to the floor and going to go back down to $200 an ounce like it was back in, I don't remember.
70s?
No, not even that long ago, like 2002. It was like $250 an ounce. Yeah.
So it's increased from $250 now.
Yes.
To like $1,400 and then back down to $7.
No, it increased to almost 2,000.
Wow.
And then came back down.
What's it down at right now?
About 1,200 and a couple bucks, and like 8. Yeah, I'm literally looking at the price right now, 12.18 for the December contract. So
For futures.
For futures, but it's not going to be that different for the current month contract and the real stuff.
So futures only go a month out, or how long can futures go?
When you purchase a future contract, you're purchasing a contract that will end at a certain date. So
so you said December. So are they?
So December. That means that contract would end in December. It's something like December 20th. Then that's the closest month of the most liquid futures contracts. Now sometimes there are other extra futures contracts in there, but when you're trading, you want to be playing in the most liquid one, the one where all the other traders are playing. You don't want to be playing in this arena where it's like just a few people back and forth. They'll just take your money and rape you on the trade itself.
Are mortgages run through futures like that as well?
They're not. The problem with mortgages is, and this is my really basic raw understanding of it, because they get bundled into packages, and they generally end up getting run into different grouped together bonds, and those bonds then are tradable. But there's not a really easy liquid market for those where you can just hey, I want to look at the chart for gold, or I want to look at the chart for mortgages that are coming due in 2020, there's really nothing like that because it's such a diverse market. It's really difficult to group them into one big package. What happened during the housing bubble was that they did try to do exactly that. They put a bunch of mortgages together, and they did something even worse. They said, okay, well, here are all these mortgages, and we think out of this group, here's the top 30% of those, and we're going to put those in this bond. And here's the middle 30% of those, and we're going to put those in this bond. And here's the lower 33% of those, and we're going to put those in this bond. And they would give them different ratings, and they would take the 30, okay, here's the AAA 33 best percent bonds from these home mortgages, and we're going to put them in this fund, and we're also going to put these bonds from these other parts of the countries into this fund, and we think that are the best, and they grouped them all together to take what was basically garbage, because the bonds from the original funds were all these pieces of shit that were what do you call them? The name's escaping me right now. Things like you'd have a maturity date that goes out 30 years, but everything's backloaded. You pay almost nothing now, but you pay everything later.
Okay.
And that was the game. Yeah, that was the game they were playing back then. It wasn't quite that brutal. I mean, nobody was that dumb. If you're really interested in that, I would highly recommend reading Michael Lewis's book called The Big Short. It was really amazing. I was really big into it when I was watching, because I traded and made a lot of money off of the whole housing bubble crash and what the effect that it had on the stock market, and it sort of drug everything down. It's kind of beyond what we really need to talk about, but it's fascinating to me. And if I started talking about it, we'd spend, we'd be up until past midnight talking about it.
Well, that's what I'm trying to figure out. Like, I've never, I can't even name the movies that I've watched that have to do with stock markets and exchanges and funds and blah blah blah. And the extent that I've had with the stock market has been 401ks and money market, and I don't think IRAs fall into that category either. But they're all like what you're expecting for retirement type thing.
Yeah.
And this is more like a livelihood than a retirement fund. This is something you have to work at every day to be able to make money off of it, and then understanding the depth of it. I'm still amazed at how this all works. I mean, I now understand, I think, a little bit, or I grasp more of how to make money off of a downward trend, which never made sense to me before because of the scenarios you said. But at the same time, it's like amazing to me that you can actually make money on a downward trend. I still don't understand how losing money, but it's because which side of the bowl you're looking at.
Yeah. Yeah. Are you on the side? Somebody's getting trampled under that thing, but if you're the guy riding the horns, you're making money. And it doesn't really make intuitive sense, but I always go back to that lawnmower analogy. Hey, how cheap could you actually end up, or expensive could you actually end up selling that lawnmower for that you never actually purchased, and then it goes down to $2, and you buy it back.
Yeah, that's crazy.
It's not as crazy as it sounds, and once it's something, as a trader myself, I never really think about. I just know I make money if this thing goes down, if I sell it. I'm going to make money if I buy it and it goes up. And I never really worry about anything beyond that at all.
Yeah, well, yeah. This,
And trying to, you can spend your free time on the toilet thinking about all the aspects of it and what's actually going on behind the scenes. But if you have a tool that says, hey, this thing is going down, and I think it's going to keep going down, and if it does, then I can put a trade here, put a stop here, and then take my money way down there. That's all you need to worry about.
yeah. That's just crazy. The market as a whole, does it? I mean, is it, the things that we're looking at for forex? I'm trying to understand, because you had said that you trade in futures, stocks, and forex, which you said was the whole market.
That's
So
pretty
I'm
much
guessing,
everything.
Yeah, commodities fall under which realm of that?
Futures.
I mean,
Yeah,
futures.
because if I'm thinking about buying oil, I'm going to buy a contract on oil. I'm not going to buy spot oil. That means I actually have to accept the damn thing and keep it somewhere and then wait for it to go up. But if I'm buying a contract, then all I have to do is buy the contract. It's an electronic thing. It doesn't really exist anywhere. It just means I'm purchasing the obligation from someone else that someone else has to sell me oil at $100 a barrel or whatever it happens to be.
Well, and see, I understand that in a really cheesy way. I mean, I could sit there when you say that. I go, okay, I understand that. It's buying somebody else's. It's like floating somebody to be able to operate for a period of time, and expecting that they're going to make money, so you'll make money. I understand that.
Well, the guys on the other end of the contract may be like, "Hey, we need to lock in our ability. We make oil all the time, or we make refined oil all the time. We refine oil all the time. We need to know what our price is now, so that we can plan for the future. Our future is going to be, hey, do we need to build 5 more refineries? Do we need to build, uh, you know, this exploration operation out in the North Sea or wherever it happens to be, or in the Gulf?" So the futures contract provides them with the ability to say, hey, we've already been paid for this at this price. Their profit or loss has already been locked in. So then they can plan based on that price. Southwest Airlines, during the initial run up in oil, had purchased oil contracts out the wazoo. And so they were able to use that cheaper price of oil and gas to continue their operation, even while oil continued to skyrocket, because they had. And it's all. This is what it comes down to, at least for the commercial players, people that are actually fundamentally invested in whatever market they're in. They early on sold or bought oil at the price that they needed, and then they worry about running their business instead of worrying about what the price of whatever commodity it is that affects their business so much.
So the same way that Ken with City Property was going through trying to set a contract with us, we're setting a contract for exchange purposes for this commodity, for the future of this commodity,
Yes.
for a set date.
Yes.
I don't know why it matters to me, but it matters. Like, are the commodities always on a month-to-month basis, or on the commodities sold on a 6
It
month?
depends
I
on
mean,
which. It depends on the commodity. A
so
lot of them have as many contracts that are by month to month as there are months in a year. But for the most part, the vast majority of them trade in a liquid fashion, only in 4 very liquid contracts per year. And that's because if there was more demand for that particular commodity, or there was more need for what's the right term? Drilling down to, hey, it really matters whether the price that we get in February versus the prices that we get in March would really affect our business. And if there were enough businesses that had that uh, demand, then there would be 12 liquid contracts per month. But as it stands right now, there's probably, for the most part, most big commodities are about 4. Those just the big months, March, like March, June, December, and September are the big ones usually.
what is, I've heard this term liquid, and I understand it to some extent, but is there a simplified explanation of what a liquid
That's a good
fund
question.
or a liquid?
Yeah. Why? What does liquidity really mean?
Yeah.
Yeah.
To me, it means that I can sell or buy this thing at any time, and it's not going to
Yes.
be like a problem selling
Yes.
it or a problem
No,
buying
that's
it.
exactly it. You already
Okay.
have a grasp on it then. The
Well,
liquid means just that.
okay, so I hear that, and I'm like, okay, this to me it means this, but I didn't know if that's what it actually meant. So,
Yeah. No, you're completely on top of it. You got it. Um, yeah, it matters a lot to traders because you never know when you need to make your trade.
well, I know
If you don't
that's
know
funny, and
when,
especially looking at those candlesticks that you're talking about. I mean, to
uh-huh.
me, a candlestick blows my mind that you could have one that spikes, opens at 20 pips, moves up to 150 pips, and then comes
Yeah.
back down. I mean, that's not liquid to me. That's crazy.
Well, there is liquidity in the fact that you're able to trade the contract, but you don't know how the news is going to affect the price of the contract or the commodity or the foreign currency that you're thinking about trading. When there will be in an extremely liquid contract, there will be extremely illiquid times during the day. And those illiquid times will be just before news comes out, or just after news comes out.
And you said that was 8:30 in the morning. Four
Yeah,
four.
8:30 is a big time. It sure is for us. Depending on if assuming we're always on California time, 8:30 is a big time.
Huh.
Another big time is when the FOMC news comes out, which is usually 2 o'clock Eastern. Sometimes it's different depending on whether they're having a 2-day meeting or not.
Okay, FOMC.
FOMC is the Federal Open Market Committee, which is Ben Bernanke, and well, he's gone now. Greenspan, was his predecessor, and now I think it's Yellen.
Okay, I've heard Alan Greenspan. Is that right?
Yep, Alan Greenspan.
Okay, so that is literally my time period when I had any focus on the stock market at all, and it was just a matter of watching a couple stupid movies and going, God, I don't know anything about this. I might as well just do some research. And I watched maybe 2 weeks. Oh crap! Did I just lose you?
No, I'm here. I just didn't
Okay.
want to munch. Just didn't want to munch my Cheeto at you.
So I spent 2 weeks going through and looking up anybody that was looked like of importance. And Alan Greenspan definitely hit for a lot of different reasons. He appears to be important, and he ended up being a lot more important than I thought he was going to be. Actually, to not to go into a big montage of stupidity, but I wrote a book that has a lot to do with conspiracy theories, and not that Alan Greenspan got into my book, but because of research on Alan Greenspan, I researched other people like David Rockefeller or David the family. What's the name? It's not the Rockefellers. Or maybe it is the Rockefellers. But anyways, I researched a lot of families, and I got involved with pork bellies and understanding why the commodities are what they are, and who handles them, and who truly holds the money, and all that kind of stuff. The conspiracy
I didn't know you delved that deep into it. That's interesting. Cool.
Well, it was for purposes of writing the book, and that was exclusive. I was not going to go out and try to day trade or anything like that. But
right,
I was. So
But you're trying to gain some fundamental understanding of what the heck was going on. So,
yeah. So and it like as interesting as Mr. and this is 2006, I think. Greenspan.
Yeah. Greenspan was still in 2006. Yeah.
Yeah, so like around there was when I was researching, and as interesting as he was, and because I'm making it very simplistic, but as much as the Jews rule the world, but that was the thing. The thing I took back was like every person that I grabbed, that I said, okay, Greenspan's important. Who's his colleagues? How does he run? Who does he work for? Who has him on commission boards? Why is he on this board of directors? And then like, okay, well, that's completely run by Jews. That's completely, it was kind of a joke, a running joke when I started looking at it. The world goes around because of Jewish money, and it's like, wow.
I was actually talking to a girl that lives in New York earlier today, and I was telling her it wasn't until I started trading that I really understood how huge Jewish holidays are. Because basically tomorrow's a Jewish holiday, and you may as well not even trade, at least not stocks.
You're absolutely
not during
right.
the New York session, anyways.
Well,
yeah.
And what's funny is my colleagues. Okay, so I work with a bunch of Mormons who have no clue of the outside world because they're so segregated in their own
their own thing.
Yeah. So I said, tomorrow's a Jewish holiday. We might as well tell all of our customers that their cars won't be ready until the following day. And they're like, what do you mean? I said, because 90% of our customers, not 90%, but the vast majority of customers who own Jaguars and Land Rovers and stupid luxurious cars, they happen to be also Jewish. And I rarely run into a Mormon who owns. It's kind of funny to me that across the street, Bell Reed, who's a Mormon, he owns a Lexus. He has the cheapest Lexus, and as much as you say, Jew you out of money, they have the term Jew you out of money. The fact is, they like luxurious things that last a long time and are worth money, and that's a cold hard fact. I can almost guarantee that 50% of all Rolls Royces are owned by Jews, and I don't pick on them for that. I just go, they understand luxury. So, anyways, when I look at my cars and I go, tomorrow's a Jewish. I knew it was a Jewish holiday also. And I called these people up and said, your car will probably be done on tomorrow, but just so you know, I'm going to keep it clean and kept inside, and then that way you can pick it up on Friday. They're like, oh, thanks. Tomorrow's a Jewish holiday. I won't be down to pick it up tomorrow anyways. I was like, yeah, I kind of figured that. When your last name's Goldstein.
Yeah. Mr. Goldstein's car, that can wait until Friday.
It's not going to leave till Friday. So the rest of my colleagues are like, what are you're talking about Jewish holidays? I've only got one guy in my office that's Jewish. And he's like, you know it's a Jewish holiday? I'm like, I've got every holiday marked for every single religion out there just in case. But yeah,
Yeah,
the stock market definitely.
you're earning your bucks. Yeah, no, for sure, the stock market is influenced the same way. At least, well, at least the United States stock market. I don't know how big it is for the European, and definitely it can't be that big an issue for the Asian stock markets. But
Well, okay,
yeah,
so the Roth.
but still, overall, without a doubt, the New
So who's
York
the
Stock
largest?
Exchange is the biggest and most important. So yeah, the
Who,
Jewish holidays matter.
who's the largest trading company slash family in the UK?
I don't know off the top. I would have no idea.
Who owns the Bank of England?
Who owns the Bank of England? Like who's the
You know,
Who's the Alan Greenspan of the BOE? I don't know.
Rothschild.
Rothschild is okay.
The Rothschild owns the Bank of England, the Bank of Germany, the Bank of Sweden, the Bank of every bank of the UK is owned by the Rothschild family. And I'm not trying to go into conspiracy theories here, but the fact is that 2/3 of the world markets are owned by the Rothschilds, and then you've got the Rockefellers who own 1/10. So if you go, David Rockefeller is worth, $175 billion. He's worth that much money on his own, not counting the rest of his family and the family's wealth, but him alone. So he owns his family, not him, but his family owns 1/10 of the world's wealth. And you go, the Rothschild owns.
But then they're fucking trapped. They can't do a damn thing if they're that big.
They're huge.
I mean they're huge, but they're at the mercy
No.
of the economy of the world.
No, they're they. So I play it the other way.
Okay.
Countries live and die by their desires, and I
could believe that.
Uganda and the
little bitty no money countries that could either.
Dozens of African countries, I call them companies, African countries that were freed during the 1985 raid where England gave up 3/4 of Africa. It was given up because the Rothschilds said we don't want to have control over anymore because it's costing us too much money. And it literally, at the time, yeah, it boils down to that. And then when they started to make money on their own because they were becoming independent countries, then they said, oh, you know what? You guys have a problem. You're trading in diamonds that are blood diamonds, and they put this curse on the blood diamonds. And I blame. I'm going into conspiracy there, but I absolutely blame the blood diamonds on the Rothschilds because they couldn't make money off of it. It's the truth. It's horrible. I mean, the diamonds that are built in Russia and sold on the free market are the same type of diamonds where people live and die in the same circumstances that they do in Uganda, but because the Rothschilds have control of Russia 100%, that they're free to trade over there. But they're down in Africa, they're called blood diamonds, and they're not allowed to be traded on the free market.
The really sad thing about that whole part of the world is just how entrenched, especially since you brought up Russia, a lot of I don't know what you want to call. I guess oligarchs are in that part of the world, and it's happened that way because they've been sheltered from competition for so long.
Yeah.
By if you're either you're a government entity or you aren't, and that's still sort of the status quo because of that was just the way things were for so long, and it takes a lot of time to break that entrenchment.
Okay, so back on topic of staying within the market.
Yeah, you want to talk about trading?
Going back to trading.
Can you see my screen yet?
No, I cannot.
That sucks.
Yeah, totally.
Let me try again.
What is? I know for a fact that China is going through an industrial revolution, and there's mass changes in their market. I don't know if it's daily, but at least weekly, because I'm not checking the market nearly as much as you are by any stretch. But I do go foreign exchange, and I have interest. Penske, among other, so I'm always interested in Penske because Penske is heavily outside of the U.S. At least 50% of all of Penske's things are UK, China, Japan, Australia. He has these huge enterprises outside of the U.S. and they have a big. They make changes on the American market based on what happens over in other places. So like China last week had this huge uproar, I don't know what happened, but they had some huge things where Penske was able to go in and buy, 400 dealerships in a matter of a week, and he dumped a bunch of money, and he doesn't ever put this out in the public in America. America, when he buys a market down in Florida, he bought like 400 acres down in Florida, and he's building 15 dealerships down in Florida.
So I would love to be able to share my current screen with you. I don't know what's going on. Are you on a phone? Can you get on a computer? Do you want to stop and switch real quick?
Switch. I can't get on the computer. My laptop is absolutely dead. I'm actually supposed to go tomorrow and buy a laptop. So I can't flip any laptops. But I don't know if I can restart this. I don't know what happened. Oh dear.
Hey, well,
why is?
Go ahead.
I can't. The screen's flickering on me. I don't like this. Opening Chrome. I don't understand why it opens in Chrome too. That's annoying.
I mean, it looks like it always does to me. I don't see anything different going on my side. And I've stopped and reshared several times, so I'm not really sure what else I could do. Well, for some reason, it does say zero viewers when I'm down at the bottom, and obviously you are trying to look. Have you been on with this phone before when we've done meetings?
Yeah, and I don't know if I could mute it. I guess I could try it with my other phone. My other phone was the one that crashed, and I thought, well,
it's not that big a deal as far as what the chart's showing, but I'll just describe it to you, and you can think about it. Basically, I pulled up when you started talking about China. I pulled up a chart of the XFI, which is a ETF, which we talked about earlier, that tracks the Chinese stock market. And really what you see is I've got it kind of scrunched up so that I can see the beginning at about 2006 to the present with daily bars, which are completely invisible now because they're scrunched up so tiny. But you can see the plunge in 2007 and 2008 during the financial crisis, and the bottoming out during 2009, and then there's an uptrend between about 2009 and 2010, and then it's sort of basically sideways between 2010 and now. In 4 years of nothing, barely, just kind of grinding a little bit higher. Looks like you're trying to connect on another phone. It's working any better? You sound better on this phone.
Okay, let me turn this on. Yeah, so don't kick me off, please. And then
there's two Jasons, one must go. There can be only one.
And I can't believe like off this phone. This is screen, and hopefully my beautiful LG headset hooks up. No, it's not. That sucks. Kill you here, try you here.
Yeah, okay, now I'm there. Okay, so now I can hear you beautifully.
All right. Yeah,
This is probably the best thing I ever did. You gotta get an LG headset at some point. This is the best thing I ever got in my life.
Yeah, it sounds fantastic.
And KFID Financial NDX.
XFI.
And this is
yeah, the
2008, 2000.
Yeah, so you're seeing the whole range. So XFI, comma. So this is the symbol XFI, which is like it trades like any other stock does on our exchange. D stands for daily, so we're looking at daily bars. So each bar on this is 1 day. Financial, I guess the index is supposed to stand for index. I don't know. TradeView does it differently, I guess. Anyways, the point is, you're getting a snapshot. Excuse me. You're getting a snapshot of what China looks like. And because we've got so much information on here, what I'm going to do is I'm going to switch from one day bars. I'm going to switch to 1 week bars. And I'm going to spread that out a little bit.
It's amazing how different the world looks between days and weeks.
Doesn't it? So this is in 2007, and then each bar is a whole week, and in about July the whole thing just starts coming apart, and down we go.
2007. I don't even know where I was in 2007.
So Lehman happened around here when Lehman blowing up, and that just really set the world on fire. It wasn't really Lehman. Everybody calls it the Lehman crisis, but it's not. Lehman just happened to be on the wrong side of things. It's really their fault, or but they were just big, so everybody calls it that. What was big and important was that the main things that were driving the market at the time were starting to crack and break, and there was a lot of risk in the market because things that were supposed to be risk-free, people were learning that they were not. And those were things like money market funds.
Okay, well, I've never thought a money market fund was risk-free. I always thought that bonds were risk-free.
No, actually, a money market is actually generally more risk-free than a bond.
Really?
Yeah, depending on the bond, because you can have bonds for. Bonds are very wide-reaching, and they can be for companies, or they can be for countries, or they can. Those are probably the two major things. They can be for municipalities. They can be for Orange County, which you didn't want to have back in, I forget when that was, late 2000s. That would have been a bad time to Orange County bonds. They're wide-ranging and extremely diverse. Money markets do pretty much one thing. This is my understanding of it, and it may not be completely correct because I don't have any vested interest in really understanding money markets. But money markets do this. They try to make money by lending money overnight to those institutions that need it. Some banks sometimes will run a negative balance and they need to borrow money. They will borrow money overnight, and there's an overnight rate. You've probably heard of LIBOR before.
Nope.
Was that a nope or a yep?
A what?
Yes or no on LIBOR?
No.
No. So LIBOR is kind of like the prime rate. Have you heard of our prime rate? Like when you're talking about credit cards? Okay. That's prime rate and LIBOR are really fundamentally connected. What was happening was institutions were trading using that LIBOR rate, which is kind of like our prime rate, and lending things overnight. And all of a sudden, everybody was so goddamn scared. They didn't want to lend to anybody else overnight anymore. They were afraid they weren't going to get their money back. And that's what made this plunge from right where my mouse is at about July 2008 to the beginning of 2009. The markets froze up. There was no confidence anymore. Everybody just decided, I can't trust my neighbor anymore. Things were trading nicely and wonderfully, and it was great. Now, if I lend you money today, I don't know if I'm going to be able to get it back in the morning.
Yeah.
There's a huge market based just on that, and it was a given, and it's all of a sudden it became, oh, we don't really know if we're going to get our money back. Things froze up, and they created a huge panic. I don't know if that will happen again, but anyways, back to talking about China. China has recovered most of what happened during that time.
Yeah, seeing that, yeah.
Yeah, but it really hasn't gone anywhere since then. It's been pretty much sideways since about 2010, maybe a little bit higher in the end of 2012, but nothing really great going on. That doesn't mean it can't, take off and go up some more. But there's no real trend there. No real trend there.
Will it? I mean,
Yeah, will it? If I knew that.
that
Whoop! I lost you. Back. Ah, there you are.
I hate that.
You just get dropped for no reason.
Yeah, so like the benefit of my Android phone is that I have better sound volume, or quality of sound. I have better calls. All the everything's better sounding, everything's better working, but it drops connectivity every once in a while.
That's weird. Now you're
okay.
Now you're connected on two things.
Kill that. Okay. Okay, so hopefully I'm not doubled voice.
You're not doubled, but you don't sound as good as just before your double came in.
What's that about? Oh. I can hear myself twice. Turn that down.
I can hear you hearing yourself twice.
That's annoying. Okay, hopefully. Is my sound volume better? Or
No,
what is this?
I can hear you fine. It just sounds kind of weird and hollow.
Okay.
It's fine. You don't need to mess with it. if you can keep it where it is and you can see my screen.
I can see your screen. Oh,
There you go. Yeah, that sounds more natural. It sounded a little bit more mechanical earlier.
okay. I hate that.
All right, so there was really only one thing I wanted to show you, and it was going back to Dr. Andrews' stuff. So I drew in a pitchfork that didn't make any sense. I used the highs from 2007, the lows from just about 2009, and the highs from 2012 almost to 2013. And the fork doesn't make any sense.
Yeah.
So it's useless. You don't just want to throw a useless fork on there. Why would we want to put in a down-sloping fork? Well, maybe we think price is going down. You kind of have to have that, a little bit of that opinion, which is why we always talk about swing highs and swing lows, because we want the swing highs and swing lows to give us that opinion. If for some reason we're going to go against the technical knowledge that the market has given us, which would be swing highs and swing lows, we just want to play what if, which there's nothing wrong with. When we think the thing is going to go down, we can just slap a fork in there and see what happens. Now, what I put on here now is called a modified shift fork, which has basically shifted. Let me go back to the original one. So here's the original Andrews pitchfork.
Yeah.
Well, I'm going to go ahead and draw in the other one. Draw this in and put it in the exact same spot. Now, if we take this and come 50% down and 50% over, which is going to be somewhere right around here, we're going to get what's called a modified shift pitchfork. And there's nothing magical about this either. It's just something that came up when Dr. Andrews was working with his students looking at markets. And the question was, if I can even remember the original question, how this thing came up. Dr. Schiff came up with this thing about for a reason, because he loved to trade. I think he loved to trade like really low price stocks, and they would have these big spiky moves. And he said, Dr. Andrews, I love your tool, but so often when I see these big spiky moves, I put a fork on there and it's useless. Well, what do I do? And Dr. Andrews' answer to that would always be, well, yeah, that's an interesting question. Come back next month and tell me what you figure out. So Dr. Schiff comes back and says, hey, I tried this, 50% over and 50% down, and it works really well in these certain situations where you have these extreme moves. And Dr. Andrews said, hey, well, that's fantastic. Let's research that some more. And he found that his general principles tend to hold for a modified shift pitchfork just as they would his original one. So the original principles are threefold. If price touches a line, it will tend to bounce off of that line. Let's put an original one on there. So first we need to find a fork that actually makes some sense. Let's see if one like here makes more sense. So this high, this low, this high. So if price touches a line, it tends to bounce off the line. It bounces off the line. This does it again here. If price goes through the line, then its next most likely target is the next line forward. It didn't happen. And in this case, it bled right down. If price bleeds through a line, its next most likely target is the next line down. So if we're going to format this, and we're going to put on some warning lines, make them green too. And now we're going to put on another one because this was such an extreme move. And I think we've completely lost the frequency, so this may not be a really great example. But the idea was that, hey, we've got price traveling in this path. What's the most likely place for it to go? Okay, right now it's going up, but here, what have you done? This is a major change in behavior. This is a major swing low, and we broke it. We're making swing lows and swing new lower lows, new lower highs, new lower low, new lower high, new lower low, new lower high. Were we doing that back here in 2000? No. We were making a new high, a new higher low, a new higher high, a new higher low, a new higher high, a new higher low.
Yeah.
When behavior changes, you can't just slap any old fork on there that you want. You have to go with the flow of price. Things changed back here, so you needed to be willing to draw in a new fork. Delete all this stuff. Because it's really easy to draw in forks that have no significance. Where is that? What did I just do?
Well, no, I'm getting some feedback. Oh, that's annoying. Okay, so the fork is like a V or a triangle.
All the fork is taking a swing high, a swing low. I hope you're seeing this in real time. And a swing high.
Yes.
And predicting the most likely path of price. This is a monster fork. This thing is ridiculously huge. We're talking about 14 years of price. No, not that much. 8 years of price. Still really huge, even on a weekly chart. You have to, give some credence and some responsibility to the things that you draw on your chart. You can't just slap at forks and go, hey, this is where price is going to go. You have to say, what is price doing? Okay, price is doing this. What's the most logical fork to draw on because price is doing this? So at this point, does it really make sense to draw in a downsloping fork? Well, no, not really.
No.
If I only saw this much, would I want to draw this fork in? No, probably not. Price is still making new higher highs, even though it's kind of going slow about it.
Well,
Maybe here we kind of took out some swing lows here. Maybe I would think about it there. That's okay. But then I come up and we see this. Okay. This fork's not doing anything for me. I'm probably going to want to get rid of it. And we think things are still going up, so maybe we want to draw that. That's kind of where we are today. That was a really shitty way to introduce someone to a modified shift pitchfork. But this is kind of the right situation where you would want to use it. When you have extreme moves like this, it doesn't make sense to have a fork that goes to 0, like this one would. That's not logical. It doesn't make any sense. It does make sense to have a fork that is going with price, with swing highs, swing lows, a new swing high, a new swing low, a new swing high, and kind of poke it a little bit, new swing high, new swing low, and go with that flow. We'll use this high or this low, and how am I picking these things? Well, I've drawn 10,000 forks. There's really nothing to it besides that. And let's get rid of all this extra stuff. So we don't need to see the warning lines right now. It's something I've never even told you about. But was this a useful fork for predicting the path of price for between 2011 and probably the beginning of 2013. Yeah, it was useful. We went up, we tagged the median line of the fork, came down, we went through it, came down, we tagged it again, tagged the bottom of it, and then for some reason, whatever reason that might have been, those highs became more important than the path of price that the fork predicted. Always go with structure and support and resistance ahead of your leading indicators, and your fork is just your leading indicator, trying to figure out what might happen in the future. So that was more important there. Got a double top looking thing, and then we came down, we broke through the fork. So we have to think, well, what's going on with this? Maybe this fork's not so great anymore. Let's draw something else.
Let's draw something else. I like
Let's
that.
draw something else. I mean, don't get attached or get in love with the things that you draw on your chart.
You're going by years right now, right? So that's the other thing, is that I'm looking at this going, okay, so this is going to happen over the course of a year or two.
Mm-hmm.
God,
Think about my teacher sitting at his drafting table. He wasn't trading, hourly charts or even 4-hour charts. He was plotting. He was probably keeping draft papers of maybe 10 to 20 commodities and plotting them out and drawing over them and stenciling over them and drawing forks and trying to figure out what the most likely path of price was. And in the act of actually drawing each bar by bar, he learned what the most logical median line was to put on each chart. Median line is just another term for pitchfork. And that way, he learned, and he put himself through college, and then he decided that even though he had learned from a man who I'm a great admirer of, Milton Friedman, who was actually a student of his, he ditched his economics degree and said, hey, I'm going to go trade on the CME. There's another acronym for you. The CME is the Chicago Mercantile Exchange, which is basically a futures exchange, the largest in the United States. And that's where he began to make his fortune. So there's so many permutations of this. Teaching it like this is actually probably really dangerous, and I may actually be doing you more of a disservice than letting you wait until I've solidified everything, and because my next project is to probably get about 3 really solid webinars built and ready that I teach over and over and over again, so that I can teach on some of these bigger websites that'll have me come over and host me. But this is my free flow brain dump from me to you.
Yeah, I'm cool with whatever, dude. This is, I'm definitely understanding at least a more complete version of what exchanges are, which is very interesting and inspirational in so many ways.
You should appear. As we go along, I'll tell you some of the stories that Tim told me about his little encounters with people that were really influential, since you're kind of in that conspiracy theory camp, of how things really work on, or used to work at least, on some of these exchanges. And some of it is really disturbing. It was like, And at certain points, he was just like, oh, okay, I'm not trading gold. It's just stupid. The game's rigged, or oil, or whatever it was. I'm pretty sure. I think the story he relayed to me was that because he was such a large trader, or became such a large trader, he was approached by one of the guys on COMEX, which is the New York Futures Exchange that largely deals in precious metals. And he took a ride in the guy's car, or limo, or whatever it happened to be. And he's sitting in the back, and there's all these. This was before things were really extremely electronic. And he's sitting in the back, and on the floor of the frickin' limo are basically what amounts to trade receipts. Okay, yeah, I said I was going to trade with you this price for this contract. And they can't get rid of the trade receipts if that was going to burn somebody without them actually losing money. They couldn't just throw them away, because then they would get in trouble with the SEC or whoever was monitoring the exchange. What they would do is they just kind of leave the receipts as unresolved until the price got to where the guy could get out of the trade. And they were just like the floor of this guy's car was littered with gold contracts.
Huh.
Yeah, really fucked up. Hopefully, I'm hope that the best and most wonderful thing about exchanges going from paper to and hey, I'm picking up the phone and I'm calling you and I want to trade at this price, to being completely electronic, because that eliminated all the whole possibility for that kind of fraud to happen. Much more level playing ground now these days.
Well, I can tell you that my book was not nearly as involved with the conspiracy theory behind the market, in as much as the key players who, or not even key players, just a few players in certain groups and circles. And I might just drop you off a copy of my book. I don't know if do you read at all?
I love to read, sure.
Okay. Well, I asked that question to friends, and they're like, okay, yeah, I love to read. I hand them the book, and they're like 2 chapters, and they're like, oh my God, this is so not my style of reading. So
it just depends. I wonder, because the first thing that I saw you post as being interesting was like some really wild and out there, well, I don't know, to me, wild and out there white paper. And you said it was really interesting, and I'm like, wow, did you really read that? Because it made my eyes bleed. And I'm usually pretty good about reading technical writings and things like that.
Which was it? I'm sorry, say that again.
I don't remember what it was. It was like we just met, and I think you'd posted something on Nextdoor. I don't even remember what it was. And it was really abstract's not really the right word. It was extremely technical. I think is more correct, and then it was not, definitely not easy reading. So if your book is like that, no, then I probably won't get through it. But if it is that distilled, things like that distilled into your thoughts and then put into word, I will read it.
No. My book is very, I guess I would classify it as a black comedy in a lot of ways. Because people, they read the book and they're like, I don't understand. Was this supposed to be a joke? I was like, I'll put it this way. 99% of my book is based off pure fact. Absolute fact. And it's conspiracy theory meets. I'll put it this way: when people ask me what is my book about, I go, "Have you ever seen X-Files?" Okay, it's X-Files mixed with with what was that guy? The ex guy from Wisconsin who was a WWF wrestler.
Fucking. God damn it. Yeah, no.
Yeah.
Snap into a Slim Jim. Was it? No, it wasn't that guy.
Him.
No, not him. Who was?
Yeah, he was
Jesse Ventura.
Okay, so I don't know if you ever saw his TV show that he had going on there for a while. I was enamored with it because the first 12 episodes of the TV show were dedicated to the things that I am so interested in, and I wrote to him specifically. I said, I'm writing a book. I'm watching the 5th episode of your show, and by the way, this is exactly what my book is all about. I'd love to talk to you about it. And he never responded to me, which was really kind of disconcerting. But that's exactly like X-Files meets Jesse Ventura type thing, only with a backstory that is like fictional. So like the main character of my book, and that's the other thing, is that like I've handed my book out to about 25 people. And I said, I want you to tell me what you think of the characters. And they come back and they talk about each character and they go, oh, this character is obviously blah, blah, blah. And this character is obviously... And I was like, well, what do you think of this person? They're like, oh, well, yeah, he was cool and all, but who is he? And I was like, that's the main character. That's this is the main character of the entire book, and nobody ever sees that because he's not... Nobody can relate to this person, and, like, I don't relate to this person at all, but it's like... It was like, okay, I specifically, and I like Douglas Adams. Okay, so Douglas Adams is by far my favorite author. Right. So yeah, most people have never heard of him, but I believe he is.
I'm there with you, buddy. Go ahead.
He's probably the most prolific author, and I say that by the fact that he has written dozens of novels that stretch the genre, and from fantasy to fiction to nonfiction, and his plight in life is so fantastic. But he is so satirical in the way he says things, and my satire, the way I placed things was the idea, okay, so that David Rockefeller came out and had a son, and he put him in power, but he didn't really talk about him because his son was a dwarf. And so, that was my main character. And most people were like, I don't know who David Rockefeller is, and the fact that he would have a dwarf son that he doesn't admit to having doesn't make sense to me. So it's like my satire is lost on everybody. But outside of that, the book is written for a junior high school level reading level, but then there are words that gets intertwined in there. I love writing. When I discuss things, I usually try to use the terminology that people at that level would understand. So I send that off to friends, and they're like, I've never heard of this word. I've never heard of that word. They're like, I had to grab a dictionary to understand 3 words in the first chapter. I was like, well, I wasn't trying to be like that. But it's like, if you're talking about dwarves, there's certain words that have to do with dwarves, and if you're talking about, stock exchanges, you're going to use certain words about stock exchanges. So it was a difficult word. It was a stupid book. It was an absolutely ridiculous. It was my first attempt at having something that was published that was global, something that was to the masses. Because my first, if you want to call them novels, my first books that I wrote that were from Giggle, they were from my friends and family, and it was just stuff that phrases that we had, words that we had that were just you and I would know about because we Faltrick, our property management. If I was talking about him, I would probably be talking about the guy that tricked us into every fall we ever had.
Right.
It was a play on words, and that was just the way I wrote my first 3 novels. And it's like, you know, to go to the general public, you can't go like that. You can't have.
No, you got to have some common ground.
Yeah, so I tried to do that, but at the same time, I tried to also write the book to different people that would be interested in it, to conspiracy theorists who are as involved, if not more involved than me in the different things, you know, to who actually runs the government, to who actually runs, and then to the joke, you know, there's a couple conspiracy theorists out there that are like, his name escapes me right now, but he's an albino. I call him an albino. He's not an albino, but he's a white-haired, white-skinned, blue-eyed Englishman who believes that all of the government rulers and all of the rulers and all the people who run the governments all over the world are actually lizards that can shift. So, you know,
it's Illuminati times 10. Yeah.
Exactly. So my book was written around the thesis that, you know, there's a possibility that this could actually be going on, and this is how it would work. So, anyways, I'll give you my. And my father complimented me in a roundabout left-handed gesture, which was, this is probably the best light reading I've had in decades. And my father, who was even more egotistical than I, and he was an interesting character. He was a prolific reader of, I guess is the way I place it, is that my father in a week would read 200 novels, and I would, you know, I'd read two.
Right. I'd be lucky if I could get through 2 in a week.
It was just, and he would read anything and everything. So he'd go to garage sales and pick up 40 books, and then, you know, his library. I wish I'd collected his library. When I went back to, and I'm rambling now, probably because I was drinking earlier, but I went back to his house in 2005 and helped him, you know, do some things around his house. And he's like, "Is there anything you'd like?" I was like, "I'd love to grab some books." And I was like, "I remember your library was rather extensive." And he's like, "Oh, yeah, I converted my entire upstairs garage to that." And his garage was like a 5-car garage, or 6-car garage, depending on how you looked at it. It was a 2-story. He lived back in Iowa. 2-story garage. So the bottom story is where you park the cars. The upstairs was supposed to be a woodworking shop, and like literally, people say that all the time. Like, wait, he woodworked upstairs? I was like, yeah, he literally. The second story was he had, you know, band saws, chainsaws, table saws. He had everything you could ever do, and he did all the work. And then he had a lift or a crane that would go out the side and drop whatever he built, and then drop it on the ground and pick it up. He could pick things up and bring it upstairs. But anyways, his upper story, his woodworking shop was lined every wall. So, you know, if you can imagine 60 foot by 40 foot, every wall 7 feet tall was covered with books, wall to wall.
Wow.
And it's just like the worst place to ever store books was in a woodworking shop.
Yeah.
You know, humidity from Iowa, and then the wood, and then the, you know, fibers, and just, it was horrible for collect. So I went in there, and I literally, 2005, I carried back about a half ton of books in the bed of my truck, and it's like no joke. And I wish I'd collected all of them, because he passed, you know, a few years later. He passed, and I guarantee his library is gone. I mean,
yeah.
Between looters and his current wife, you know, taking his stuff and just selling it at garage sales, I'm sure it's all gone.
Yeah.
But I grabbed like the first 500 books that I could find that were, you know, of interest to me, and it's you know, and I jokingly, I've got a friend that works at my office that is from Bosnia, and I'm like going way off topic. He's from Bosnia. He escaped during the Bosnian War. He's a few years older than me, and he speaks fluent German because he was in a concentration camp of sorts, and what I call concentration camps in Germany, for years before he got to go to America. And so he speaks perfect German. I was like, "Oh, I'll bring some books in." He's like, "What do you mean you bring some books in?" I was like, "Well, you know, my family was from Clarinda, Iowa, and few people understand that Clarinda, Iowa was actually not founded, but it was popularized as a result of concentration camps in America. And he's like, what? I was like, yeah, prisoner of war from World War II were actually stationed and housed in Clarinda, Iowa. There's some 15,000 prisoner of wars that were founded in Clarinda, and they basically built the town and built everything around it. And they were prisoner of wars, and just like they had concentration camps in Germany, we had concentration camps in America, but they were in little towns like Clarinda, Iowa, that nobody ever heard of because nobody wants to talk about how Americans ruined Japanese Americans' lives, or German lives, prisoner of wars, or all the different things. But so my Clarinda, Iowa's library had books like this book that I have from 1835, from the Geological Survey of the World. It is all completely in German because that's what they had German people that were there, and it's just. So I had this book, I brought it in there, he's like, oh my god, this is so interesting. See, I had never read the book because it's all in German, and I don't have any, I have no interest.
Yeah, that would be really hard.
But I've got this book that's like, over 100 years old. It's fantastic to look at. And there's plenty of pictures drawn out and painstakingly drawn out. I've got all these old books that I collected from him that were really, jokes. Oh, that's another one. I've got this joke book that not a single joke makes sense to me, but it's also 100 years old, so any joke from 100 years ago makes no sense to anybody. It's just a lot of these interesting books that are in my library and that I got from my dad, and it's just a lot of that stuff. I don't even know where I went with that, but it was culture, interesting reading. That's the type of thing that my dad did, and that's why when he said that light reading, because my book's only 200 pages long, he's reading all these books that are like 500 and 600. War and Peace is like a light reading to him, and
Right.
like 100 pages? Are you kidding me? He's like, oh yeah, I read that in 2 weeks. Like what?
I always wish I could get my reading speed up so that I could just cruise through things like that and then still be able to retain everything that I read. I feel like when I really try to speed read, I end up losing too much.
Yes.
Plus, I don't enjoy it as much either.
Well, and then so I think my father had the same. I think I collected my insomnia from my father.
Oh yeah.
Because my mom definitely sleeps well, but my dad was somewhat at 70 years old. My father was a volunteer firefighter. He was a full-time EMT, and then he taught at the Institute for Challenged Youth during the day. And so he would, he'd work from 7 in the morning until 3 o'clock in the afternoon, and then he'd go home, eat supper, and then he would go out for an EMT shift. And then if there was ever a fire, he'd be called and he'd take care of that. So he was just constantly working. And somehow he has found time to read all these books too. I was like, I didn't understand it. I never understood it. But that's totally me to a T, because I'm working this full-time gig over at Penske Automotive Collision, and I'm working as an instructor for iCar, and then I'm also doing committees, a board member for my HOA, a board member for the iCar committee meetings, and then I'm also working on 3 other novels currently, and then I've got I just had 2 papers published in a poetry contest. So I'm like, I've got plenty of things I'm going on too. I don't know why.
I think you got about 50 more irons in the fire than you need. Sounds like. Oh.
But yeah, I looked at my dad and I was always impressed, and so like when he said that, I always call it a left-handed compliment, because my father, his favorite thing to say to me was that there's always going to be somebody taller than you, faster than you, smarter than you. So don't pride yourself on achievements because somebody's already beaten you. It's just annoying to be beaten down all the time. And anyways, yeah, it just when he said it was the best light reading I've had in decades. I was like, that most people would have looked at that and thought of it as a negative, but I really think that was probably the best.
Yeah, especially considering who said it. I mean, I think just in general it's a compliment, but considering where it came from, it's outstanding.
Yeah, and it's like my book. He's like one of the few reviews that I have on Amazon of my book, and it was right along that lines. And I read that, and he goes, I don't think 95% of the people are going to understand the depth of that comment. So if you had just said it's a halfway decent read, that would have been so much more than what you said.
Right. That sounds pretty good to me. I like it.
Anyways,
We'll see how my book does. I'm trying to get it out in the next couple of weeks, actually. Probably just be a little electronic one. I don't know if it'll have to be a paperback version of it, but kind of a nice solidification of general trading principles. So, Mark's supposed to be reading it this week and giving me some feedback. And if you'd like to read it, I'd be happy to have you read my rough draft of it, because it would be good to have, I guess, more of a lay view with a little bit of background now that I've been talking with you for a while. So yeah, I'd be happy to let you see it if you want.
I would love to, absolutely.
Sure.
I will tell you that I'm no good at grammar or anything like that.
No, that's not what I'm looking for. I'm looking for communication of concepts and ease of reading. And I think there are going to be some sections in there that are going to be, because they're just kind of brain dumps. They're going to be a little bit difficult to understand, especially getting towards the end, because at the end I've got a lot of examples. And I think it's going to go part of the book, but it's also it's only like 40, 50 pages long, not even that much. And most of it's charts. But I like that it's complex towards the end, because that's how trading is. They're very simple principles that you apply towards the markets, and then the actual bringing them all together can be extremely tricky in a lot of ways. So the natural progression of the book kind of brings it out. That's my theory anyways. It may completely fail. I need to try it out on some people to see whether it makes any sense or not, because I want it to be one of those manuals where, hey, yeah, this was like one of the first few things I read, and I still pick it up 10 years later, and it was the first thing that got me into trading, or one of the first few things, and I still pull it up to reinforce things that I need to do when I'm trying to make my living trading.
That's awesome. Are you going to be promoted by anything? Do you have any way of getting promoted?
Yeah. Mark's helping me out a lot with that. He's going to. We're going to do a press release, and then kind of have it in conjunction with a bunch of new stuff popping up on the website at the same time. He's connected with the guys at fxstreet.com, so I'll probably start doing webinars over there. I hope they'll take me in. So that'll be some nice promotion there. That's my plan so far, just as far as marketing goes.
Do you have a scheme? Do you have anything like laid out where you say that this is your plan, this is the tools, this is the things you look for, these are key indicators,
Yeah, the book is actually called 5 Simple Keys to Trading Any Market Profitably. And so I lay out 5 steps, 5 things that you need to look for to be able to put your trade on. But I also plan on it being a series of books, all probably about the same length, so that when I've got, once this one's halfway decent success, I can just write another book. Okay, here's my book where I show you how to make a trading plan, and how to manage your trade and things like that. Whereas this trade, this book is about um, how do you read the markets. You know, you look first things you do or look at um, you know what price is actually doing. And then you look at big blocky structure. Then you look at whether it's trending or ranging, and you look at um, can you actually put a trade on there? These kind of like the fundamental basic steps of things that you need to do and learn and understand before you can make a trading plan. In this book, and probably the second book will be, okay, now you know these things. How do you actually make your trading plan, and how do you go forward with that? And I'll have a ton of examples in there as well.
Gotcha. I'm expecting or in anticipation of of the webinar tonight, this evening. I had heard something on the radio that made me go, oh, I wonder if if we're gonna have some kind of like hook with Carl's plan in his book and his different things, his website. Because I heard something on the radio where a guy said you can make $1,000 a day, and I can't remember the other part of the hook. But he was like, I got these simple tricks to being able to trade on the open market and make $1,000 a day with only risking $100. And I was like, oh, that's a good hit. That's a good hook.
Yeah.
I was like,
Good luck, buddy. Well, you know, he'll hook. He'll hook his fish. Good luck to the fish.
yeah.
Yeah.
No, exactly. No, exactly. I was listening and going, okay, I can. The best case scenario is probably what he's telling you is that I might be able to make $1,000 off of $100.
Yeah, but the guys that are able to do that probably don't need a system.
Exactly.
Yeah.
Well, my phone is about to crash again. It says, unfortunately, Hangouts has stopped. I don't know why I'm still talking. I'm looking at my phone right now.
It's happened many times. I wish they'd put some more stability in this thing, but
No, I truly think it's my internet connection because I'm working off of a router right now, which is in my living room, which is 50 feet away from me, and it drops me at least once every 10 minutes. That's why. Yeah. And the iPhone, it doesn't drop. You still there? Hello? 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 Hello?